Hey everybody, I have never done a live before, so I have to invite Matt. Let's see here. All right. Hey Brendan. Hey.
Hey, what's going
All
on?
right. I figured it out. I wasn't quite sure. I had it in practice mode, and then I was trying to figure out how to add you, and got it.
It's okay.
So
It's all
a
the
couple,
exciting things of being live, you know?
I know. So a couple people are joining, which is awesome. So I guess we'll get right to it because we're obviously going to be putting this on our post as like a replay. But for those of you who don't know Matt Northcott, aka Mortgage Matt, I never call him by his first name. I always call him Mortgage Matt. He is a mortgage broker with Mortgage Architects, and he services uh, pretty much all over the GTA. He's local to Durham region, but yes, he'll service all over. And he has the flexibility as a mortgage broker to work with many different lenders and different banks rather than just walking into one bank with one product. He is very flexible and he can work with you on your individual needs and all that stuff. So I thought it would be really good and timely to talk to him and pick his brain a little bit about what he's seeing in the market, especially with this recent rate hike. I know a lot of people are feeling a little bit nervous and discouraged, especially for those who are looking to get into the market or maybe do a move up. They're saving for a down payment. It just seems that the cards are stacked against them. So I wanted to pick your brain on that and just kind of see what you're seeing on your end of it. We service a lot of the same clients and the goal is the same, but you definitely get the more nuanced questions when it comes to the finance side of things.
Yeah, it creates a lot of chitter chatter for sure. So the Bank of Canada just raised the interest rates by 0.75%. So what does that all mean? That's the biggest question here that everybody wants to know. For anybody who has a fixed rate mortgage, this change doesn't really affect them kind of whatsoever. So it doesn't really matter kind of what the Bank of Canada raises prime to. If you're locked into something with fixed, you're fine. The majority of people would say that there's really only kind of two products, fixed or variable. But the most people don't really know is that there's a third wheel in the game, and it's actually an adjustable rate mortgage. So those are the people that are affected most when every time the Bank of Canada makes a change. So the adjustable rate mortgage comes with all the same great benefits of variable, except the interest rate gets adjusted every time the Bank of Canada makes a change up or down. So if you're in an adjustable rate mortgage, and you'll know you're in an adjustable because you're going to get those letters every time the Bank of Canada makes a change saying, hey, your payment's about to increase or it's about to go down. So that's how you know you're definitely in an adjustable, not necessarily in a variable. So if for every 40 or for every $100,000 worth of mortgage, your payment would go up about $45 over this last rate hike. So if you had a $400,000 mortgage, you can expect about $180 increase in your monthly payment after this increase takes effect. Yeah. So the variable rate mortgage is a little bit different. It usually comes with a static payment that doesn't change. Instead, every time the Bank of Canada changes the rates, it would just reallocate how much of your payment goes to principal and how much goes to interest. So when prime goes up, more of your payment actually goes to interest, and when prime goes down, more goes to your principal. So it can definitely be an attractive product because it's good for budget purposes having that static payment. So a lot of people like that feature there, but not many lenders offer that. But a lot of people just call it variable because variable is kind of like the general term. But a lot of people don't realize that they are actually, in fact, in an adjustable rate mortgage.
Well, I think I am because we're
Because you
noticing
get those
definitely,
changes.
yeah, and that's something, interestingly enough, when we first bought our home, that was something that wasn't really explained to us. So it's so good, you being a mortgage broker, like you can work out those fine details and really explain to people. Because budgeting, a lot of people do budget based on their set income. And then for us being self-employed, I know a lot of agents are chiming in too, and being self-employed, budgeting is definitely even more important, right? So that's
Yeah.
very interesting. Yeah.
Because that's what I like to always present options for sure. Like I usually give clients four options. Like one is the best adjustable rate mortgage, and the next one would be the best variable rate mortgage. Even though they're kind of the same, but they're not. One has the static payment, one doesn't. So they're kind of it's a different product, but it's basically they both take advantage of the good variable benefits. Of the 3 months interest penalty. Opposed to the fixed rates, but it's good to have that option. But the big question that I've been getting a lot is should I lock in? Like everybody wants to hit up. He's like, should we lock in? What do we do? First off, I wouldn't really be taking the advice from the lender calling you, trying to entice you into that fixed rate mortgage, considering that person is most likely, going to get a bonus for every client they convert into a fixed rate mortgage. I always say there's a lot of variables in life, and your mortgage should be one of them. If clients are really hard up though for fixed rate mortgages, I actually like to promote the 3-year fixed rate mortgages, even though I actually get paid less on them. I know the clients will save because it's a lot easier to predict a 3-year term than it is a 5-year term. A lot can happen in 5 years, and so yeah, you never know, you know what I mean? Like 5 years is a long time. If you look at yourself where you are right now and look back 5 years ago, look how much your life has drastically changed. For the most part, a lot of people have done a lot of changes. You could change careers 3 times probably in 5 years.
Yeah.
Yeah. But honestly, so something you can consider as well when clients are looking at 5-year fix, especially with the major banks, is consider this. Like basically the U.S., they're in a recession, and basically, we might not be too far along. So what happens during a recession? The interest rates come down. So if you guys were to lock up into a 5-year fix at like 5.5% right now, and the rates go down into the 4s and maybe even 3s in the next few years, you would really be kicking yourself as to saying, man, why did we lock into that 5-year fix at 5.5%? Regret is a real thing for sure, and not to mention what the penalty would cost you guys if you wanted to break that mortgage. Because that's one thing, that the major thing that I like to educate clients on all the time is penalties. When it comes to taking a fixed rate mortgage, because even though everybody goes into it with the best intentions, the reality is that 7 out of 10 people break their mortgage before the 5-year term is up. It happens a lot. It's like people are not alone. It's a variable that comes into play almost all the time.
Right. And to kind of spin that, what advice or what are you seeing with the people that are looking to refinance? Because a lot of people purchased, 5 years ago, most people are on like a 5-year fix, and they would be needing to refinance now at this higher rate. So what do you say to those people who may be really hesitant? Obviously prices are up, they're down, but they historically over the last 5 years, they're up, drastically. So what do you say to those people?
So if people are looking to refinance, it's kind of a little bit of a different thing. If it's a refinance like to consolidate debts, then it still could potentially make sense. Because what I like to do is I like to break down like a good what they're paying right now with their current mortgage and all their debts that they're looking to consolidate, rope it all into one payment and say, this is what you're paying right now, and this is what we can offer you on a new mortgage, even at these higher interest rates. And majority of the time, it still makes sense to increase the cash flow, especially if somebody has high credit card debt, high line of credit debt, or a car payment that they're trying to roll in. And so that still makes sense. Renewals would be a little bit different, where if somebody they wrote out their 5-year term, they got to the end, and it's coming up now, and now it's going to be a supreme difference from the interest rates that they were getting for the last 5 years. If the cash flow really is a problem, even if somebody was on a 30-year term 5 years ago, that has went down to 25 years now. They could still do like a refinance to basically kick that back up to 30 years and kind of potentially balance out that big direct hit that the interest rate is going to change. So they could mitigate that a little bit by just kind of restarting that 30-year clock. And I always recommend going the highest amortization anyways, because it basically, every lender comes with prepayment privileges. I'm always on the side of cash flow for everybody. People get in trouble with credit card debts and line of credit debts when they have a cash flow problem. They're trying to max out their payment. They want to take that 15-year amortization or the 20-year amortization and really stress themselves out. Yeah, you're plowing your mortgage down, but your credit card debts and everything else is climbing sky high. And it's because you don't have the cash flow.
Yeah.
So it's always a cash flow problem when people run into that. So that's why I always recommend taking the highest amortization, and then you can always have the option and ability to put that extra money down if you really wanted to.
Right. Yeah. I mean, you have to live in a home anyway, so you might as well have some type of balance and lifestyle, so you're not racking up that debt, and you can budget. It all comes to affordability, right? So, but that being said, affordability, I know there's a lot of home buyers that have been waiting for a very time market. Myself and Brett have been working with a lot of them as well, and it just seems like every time that they're ready to save their down payment, something else happens, the interest rate happens, prices go up, it's all over the place. So I guess, what are you seeing? Originally we had, when we talked this morning, you had mentioned you had a scenario based on like affordability and just kind of you're seeing things in the market a little bit differently, like I said, because we haven't been able to really those discouraged buyers. And I do think affordability is still there for a lot of people. So I just, again, wanted to chime in on that and see what you're seeing with first-time home buyers and their payment and all of that. Do you still see people getting into the market for the first time?
First time home buyers they've been tricky for a pretty long time. Like where just down payment is usually a problem. So a lot of times they're getting help with mom and dad. Like that bank of mom and dad has been pulling through for a lot of times for first time home buyers. But for active buyers out there, they will definitely most likely need to get their purchase price like adjusted and definitely looked at again. Because I'll give you an example of a one that I was working on this morning. The clients, they purchased they had a max purchase price for $800,000 and with $160,000 down, which is 20%. Mm-hmm. And so now keeping that same $160,000 down payment, their max price just dropped down from 800 to 760,000. So it's dropped about 5%, their purchase power. But who knows, because of the hikes and everything like that. But who knows, because of the hikes, the prices might fall another 5%. And that $800,000 house that they were looking at might be listed now for 760. So you'll be at the same place.
Exactly, it's relative, right? And we're seeing a lot of areas in Durham region are down upwards to 20 to 30%, depending on what specific community. And I was looking this morning, and like almost 300 just in the last 7 days, 300 new homes listed in Durham region, and so many of them have had price reductions. Because there is still a lot of inventory and the buyer demand, everyone's just pulled back a bit. So I think now is a really good opportunity for anyone who's kind of wanting to get in, and whether it's for a long-term investment or you just want to buy your first home, right? So, that mortgage payment may not change very drastically compared to, say 3 months ago when they were looking, but prices are down. So things are leveled out a little bit.
Yeah. And I always say it always comes down to like, do you really want the property? Do you really want to buy? Getting into home ownership is, you got to get in. Like there's no other way around it. People wait themselves right out of the game. It's they want to play the wait and see game, but it's a very slippery slope. Like where I've had plenty of buyers who were trying to wait before this pandemic here, and it's just been a mess. Like they just basically waited themselves right out of the game, and you get stuck. You get stuck renting. So it's definitely. The only way to get in is to just get in.
Yeah, you can't time the market, and if you can afford it now, it serves that use of home ownership, right? We have a lot of clients that got in that were maybe a little bit reluctant, but they got into home ownership, and that really kickstarted a lot of things in their own life. So why pay someone else's mortgage when you can pay your own? And historically, interest rates are still very, very right? So.
Oh yeah, and that's what it is, and that's why I always like to promote. But one thing to touch on too is when it comes to fixed rate mortgages, especially with the major banks, is how they calculate their penalties. So the major banks have what's called their posted rates, okay? And it's basically serves no other purpose than just kind of screwing people on high interest fixed rate penalties. So just for the sake of good numbers here, I'll say the major bank's posted rate is 5%, and they're going to give you an interest rate of 2% because that's the going rate everybody's getting right now, okay? And what they've done is they've given you a 3% discount off of their posted rate. And you don't really think nothing of it until you go to break that mortgage and they say, hey, Sarah, remember that discount that we gave you? Well, that's what we're going to use to calculate your penalty here because you didn't uphold your end of the bargain and complete the 5-year term. So that's why I always tell clients, especially when dealing with the major banks, is to never focus on the actual rate. Focus on the discount because the bigger the discount, the bigger your penalty will be if you break your mortgage. Because I've seen some penalties for like on a $400,000 mortgage, like upwards of like $30,000. And people are it's obscene. It just basically strong arms you to basically say, all right, I guess we're not refinancing. I guess we're not putting that pool in or finishing that basement or consolidating our debt, Yeah.
And that affected people back when they were purchasing and buying before they sold, right? Kind of putting the cart before the horse, not really knowing the terms, and maybe a mortgage or bridge or whatever the case is. And then here there's a bill. It just, puts a dent in everything. So yeah, a lot of fine print that clearly I didn't even realize until you said that we're in an adjustable mortgage, because our mortgage payments have been since June. So
yeah, no, for sure.
So are you seeing anything else, I guess, like, I guess the rhetoric around the rate hike?
Like where it's going to go, or
Yeah, like, I guess just like I'm getting people messaging me being like, well, when is it going to end? Are you locking in? Are the rates going to keep going high? Like, there's obviously, we don't have a crystal ball and we don't really know what will happen. Like you said, 6 months to 1 year, a lot can change. But the people that are very reluctant, I know there's a lot of people that are just trying to time the market. Brett made a comment on here and he said, you can't time the market. Are you seeing a lot of hesitancy from people that may have got their pre-approval 3 months ago and now they're like, yeah, we're just gonna wait?
yeah, like it's where a lot of people are trying to do like the wait and see of like trying to see like when are the rate hikes going to stop? Like that's the biggest question, I think, because everybody wants to know, okay, when it stops, like when are we going to like have a level playing field here? Like when is the dust going to settle? And it's like we're just getting beat up and it's just blow after blow after blow. You're getting punched in the face, every time that they make an announcement. So, and the next one is late October. But honestly, I feel like this should be the last one. It's just my personal opinion. My gut hunch here is that this is the last one, but they don't want to promote that because they don't want to put that narrative out there because it's basically they don't want everybody just relaxing and just let everything go into crap again. Because it's directly tied to inflation. So depending if you follow inflation and watch how inflation goes, if inflation is on the downswing, things should be okay with the variable adjustable rate folks.
Right.
That's what one thing there, because the variable adjustable rate mortgages, they're tied to a different market. Like it's a different thing that drives the fixed rates are driven by the bond market, and the variable that's driven by inflation. It's in the Bank of Canada raising prime up and down. So
Yeah.
it's two different things that dictate those rates. So that's why people are confused all the time. Just because the Bank of Canada raises their rates doesn't mean that fixed rates are going up. Fixed rates can actually go down depending on how the bond market's performing.
Right. Yeah. People just see kind of the rudimentary headline. Interest rates are go in the grocery store. They see everything. So
one size fits all,
exactly. Not that way. And every situation is so unique. So that, speaking to myself, to Matt, and just figuring out if you have something planned for the future, whether it's purchase or you want to upsize or you want to refinance, like your situation is so unique from someone else. You're in an existing mortgage, your terms, like we've learned, is they're so unique compared to other mortgages. So if you have any questions at all, like we're definitely here to help you. And if you have questions right now, you can pop them in the comment bubble and we can answer them. But otherwise, I know we're fast and but I think short and sweet, give the information, and any specific questions that you have, you can reach out. But if there's anything else, Matt,
yeah, just if anybody wants to get I feel like it's crucial all the time to get yourself set up with a good formal pre-approval, and go through the whole process. So when you work with with realtors like yourself, they can put that offer in with confidence, knowing that they've been fully pre-approved here and they got all their ducks in a row. I have access to 50 plus lenders, including the major banks like TD and Scotia. And when sticking with traditional lenders, my services are 100% free of charge. So I shop rates for clients so they don't have to. That's the benefit of working with the broker channel, because a lot of people think that they have to pay for us, or we cost money or we're extra, and it's not really the case. I consider myself a one-stop shop where we do one application, one credit check, and one document gathering process. So I pretty much talk mortgages 24/7. So
yeah,
that's why I make myself available 7 days a week, so clients can a day or night, so clients can pick a time that's most convenient for them.
Yeah. Absolutely. Yeah. And I know Brett's not here with me. I'm trying to get on camera a little bit more, but he's in the comments and he mentioned to get a CMA done. So part of market analysis on your property. You haven't been in your home for a while and you don't really worth with all of the downtrends and prices. I'm happy to provide that to you absolutely free of charge. Like I said, we offer that with no cost as well. So yeah, if nobody has any, we can repost this after, and I think hopefully we don't have to do another one in October. But if they do, maybe we'll hop on here again. But yeah, this was great. Thank you for
awesome
short notice.
Thanks for having me, Sarah. Have a great one.
Bye, everybody. Have a good day.
Bye, guys.